Hello and welcome to another episode of Street Smart Investing. I'm Albert, your host, and today I am doing the video on Camping World. So Camping World is going up against the top earning company for this sector. And let's talk a little bit about Camping World. Camping World is in the auto vehicles, parts, and service retailers. So they are into RVs, as you can see there, insurance programs, vehicle service contracts. So they also do repairs as well, and accessories and supplies. So anything with RVs, that's what they have to do. So let's begin. Today is February 2nd, 2021. And this is Camping World. You have the 1-year chart here. So let's start from the top. Camping World at $35.97. They're up for the whole year, 121%. You could run the share price actually to 36. Relatively medium-sized company at 3.19 billion. As you can see, look at these numbers. PE ratio is at 18, slightly higher than the normal 15 that I like to go for. As you can see, the earnings cover the dividends. Dividend yield is at 1%. So let's talk about the dividends. They are very consistent in bringing in dividends, and this is one of the main reasons I chose this company. As you can see, they also pay special dividends, and they are consistent in paying special dividends. So what else we have here? Yeah, the 1-year chart. Basically, what is the difference between when they earn and when they pay? I think a month later. It looks like they're, let's see here. So revenue, so that was August 5th, and dividend was in September. So I said about a month. So yeah, that's about right. They pay about a month later. Let's go with, whoops, I didn't want to rewind the chart. The order book, it's not much to see. Order flow, as you can see, there's more, I wouldn't say selling, but there's more outflow than inflow. So I guess people are ready to sell or trying to sell. So as you can see, the last 5 days, orders have been coming in. So it looks like some buying. That's just what the result that I can come up with just by looking at that, but it's not certain that it's not certain that is the final result. But analysis, as you can see, 10 analysts, that's a lot of analysts to say that. So 50% buy, half of them say hold. That I don't even look at because the prices and stock market has been crazy, very overvalued. Just been buying today. So as you can see, it's in an uptrend. It went down. This is a 1-year chart actually. So as you can see, went down, went up, kind of went, I wouldn't say flat, but this is where it's either gonna go down a little bit and it has to break. It's like a breaking point, as I like to call. And then yeah, it just shot up in March, and just like all the other companies, and they're holding steady. It kind of dropped here and then it kind of picked up again. Now it looks like it's dropping slightly, and you know, it just still looks like it's gonna continue to hold, you know. So we have insider activity. I apologize for my screen. I know it's cracked. I gotta get a new phone. But yeah, as you can see, looks like did they buy or they sell? Shares traded. So yeah, I don't know if they bought or sold. I'll have to look at the statements. So anyways, yeah, they either bought or sold on of last year in August 17, 2020 for a price of 35.30. Let's see insiders. Let's see. Let's rewind to August. Okay, what was that date again? Let me see. 17th, August 17th. So this is what Form 4 looks like. So that's not the name that I saw. 10% owner, so you're definitely a big high roller for this company. Well, obviously, if you're the management committee, have to manage this stock, so obviously you have to buy and sell your convenience. So yeah, it doesn't, maybe it took a few days for completion, so I'm not sure where the holdings are. It's got to be here somewhere. But anyways, you can see they bought. The 5-year and the 1 year. So financial, so they miss, hit, and they're waiting for that. I do not have 2020 results, so I apologize for that. Maybe it's the app that is not functioning correctly. And yeah, maybe it's not, because the PE doesn't show, and all these don't even show, but they do show up top. See, the PE shows there, and you can see the bars for the debt. Where is it at? Net income? No, balance sheet, sorry. Yeah, see, 2019, there's more purple than blue, so there's more debt than assets. That's a bad thing. It needs to be more blue than purple, and that's 2019. Imagine 2020. Oh geez. But yeah, they still pay dividends even though they have a high debt. I really need to see that debt go down though. So yeah, let's see who they up against. So Camping World, I chose Camping World, and the top earner is, ooh, wow, that's tough. AutoZone. We have AutoZone. Wow. So if you would have bought It would have paid close to $740 in March for one share of AutoZone. AutoZone is close to $1,200 for one share, for one stock. That's insane. That is insane. I don't really shop at AutoZone that much. I don't know why this stock is so blown up. Normal PE, that's a normal PE, so it's right on target. It's not overvalued or undervalued. That price is just insane. I still can't wrap my head around that. Even at 700 and whatever, 40, I think it was. That's insane. These numbers are insane. So yeah, medium order beats the inflow, beat the outflow. Last 5 days looks like more selling overall. Analysis. Yeah, I don't believe in that. Slightly more selling, yeah, and even just the overall more red than green, and then this way you have, yeah, looks pretty even because the green is like that much. Yeah, you have more selling than buying. Wow, okay. So in March it went up, got flat, slightly went up, then it went down, then it got flat again, went up, down again, flat again. So it's just flirting. It's just bouncing up and down. It hasn't had a breakthrough point. So what it's doing is it's in a wedge. So basically it's neutral. It hasn't broken that line yet fully because it's gone back down and held back down, especially during this point and this point. So that tells me for the long term it'll be flat around that price, which ain't a bad thing. I mean, again, the price itself is pretty insane. So January 1st, 2021, shares traded at a price of 0. Yeah, okay. Price for free. Yeah, I don't know about all that. So yeah, AutoZone. Let's see if I have any these numbers. 76 PE, no dividends. They don't pay dividends. Volume. Well, we're off the market, off hours, but I'm sure that number will be much higher. So they hit estimates, hit, and hit. They keep hitting those numbers. Those are insane. I rarely even seen a number go past even 5 or 6. So AutoZone is definitely a favorite. So I do have 2020 estimates for this. I do have them. Return on equity. That's not good. Well, it can't be that bad, but they have a decent return on asset. So they're making money on assets, and they're using equity. Unless I think they're reinvesting their equity. Probably, I think that's what it is. So whatever cash they get, they're reinvesting in it. I think that's why they're negative. I don't know. That's just my assumption. That's just a common answer. Again, that's not my final decision from the company. It's just a guess. So we have the margins. Let's look at their margins. Those are good margins. Usually 3 to 5%. I typically see even 3 to 6%. I usually see. The debt is insane, even though they lowered it. But yeah, that's too much debt. They can get away with it, I guess, because People love the stock, so when people keep buying for that price and hold it there, I mean, the company definitely takes advantage of that. Definitely. So net income they've raised, that's good. No, I don't want to see that. Takes too long. Revenue's gone up, that's good. That's pretty good. They have more debt. Wow, so they gotta be 110% debt, I'd say. 107, I was close. That's insane. I do not like this company. I mean, if you're gonna be in debt, at least pay dividends, because that way, I doubt companies usually cut dividends, because that's when usually the stock is not as appealing to some people. But if they're not paying dividends and you're in debt, that can be a huge problem as well. In general, not for everybody, because then some people don't care, but it is what it is. So let's see, like I said, they are investing, so that's $500 million. So they have still 2.7 billion. No, that's not what I wanted to do. Let's click on financing. So yeah, they got plenty of cash from operations. That's why they have plenty of cash on the sidelines. That's why I don't get it. Like, they have over 2 billion in cash, yet they're that much in debt. So let's see, let's do the math here. If they're a little bit over 2 billion in debt, how come they don't lower their debt? How come they don't just pay 2 billion in debt and keep the rest, so that way at least you're less in debt than what you owe? But then that's the thing though, look at the trend though. Like, if the debt was lower all these years, then I could understand, and then this year it went up because things have been crazy. But past 5 years, all these years here, you've had more debt than assets. Then I don't know what the hell. I really don't know what the game plan is. This is, I don't know, these numbers are just crazy. They have normal PE, they're highly in debt, they earn a lot, they reinvest. This is a tricky company. I wouldn't invest in it. Even if it was half the price, I still wouldn't even touch it. It's just, those numbers are funky. That's insane. And no dividend, highly in debt, normal PE. You do earn a lot, but I think that's why. I think it's because you earn a lot and have a lot of cash, and that's pretty much it. So yeah, AutoZone, they sell auto parts, and they're #1 earner for this sector. So I think there you have it. Again, I didn't have the 2020 estimates for Camping World, but as you can see, Camping World versus AutoZone. I still like Camping World, even though they're both highly in debt. Yeah, the company AutoZone has way more money in market cap, but Camping World seems more stable. AutoZone is just too tricky for me. It's just too tricky. I'm just not fond of it. So I'll see you guys in the next one. Thanks for watching, and take care. Bye.